So now we'll see what is the meaning of receipts. All receipts during a particular period are debited to receipts and payments account irrespective of the year for which they are received and irrespective of their nature, revenue or capital. So receipts are going in a period or debited in a debit side. So such receipts may be related to previous year or current year or next year. So they are considered in this while calculating a particular period, calculating maintaining a cash book. Now need to consider three things, that is receipts may be related to previous year and current year and next year. All receipts are debited to this account. Receipts are coming under the debit side entries. So we need to consider first three entries, the three important things in receipts, that is previous year and current year or next year. Receipts will debited to the debited to this account, revenue capital. And next is payments. All payments during a particular period are credited to receipts and payments account irrespective of the period to which it related and irrespective of their nature, revenue or capital. Such payments may be related to previous year. Same here also in a receipts, how rules are applying in the payments also. These are the applying previous. We need to consider previous year payments and current year payments and next year payments. Similarly, such payments may be revenue or capital expenditure. All are credited to this account. So, so this is the receipts and the payment differences. So now we'll see the receipts and payments account for the year ended 31st March 2018, 19, so whatever the year. So receipts amount, payments and account. Debit side receipts are coming and credit side all payments. So to all receipts, revenue or capital, previous year, current year and next year. We need to consider these 3 points, that is previous year, current year and next year. Previous year was the last year, current year is the current year now, and next year means next year. So coming year. So in a in a payments also it is the same. These are the all by all payments, that is a revenue or capital, that the previous year, current year and next year. This is the receipts and payments account for the year ended 31st March 2020. Now we'll see what are the features of receipts and payments account. So receipts and payments account is a real account. So receipts and payments account is similar to cash book. Summary of cash book and bank transactions. Though receipts and payments it is a similar to cash book. So what is the cash book? You already studied in the last year what is the cash book. A cash book is a financial journal that contains all cash, receipts and disbursements, including bank deposits and withdrawals. Entries in the cash book are then posted into the general ledger. Journal entries and ledger entries. That is a cash book. Debit side particulars, debit side, credit side, and ledger. That is the cash book. And now we'll see that third one is what includes all types of receipts and payments. What are the records, what are the items are included in a receipts and payments account, that is revenue or capital account. It records all receipts and payments made during a particular period, that is current year, previous year, that is current year, like we need to consider that previous year, current year and next year. So using these year entries we are passing the receipts and payment account. Next, income receivable and amounts payable are not recorded in this account. Income receivable and amount payable are not recorded in this account since it is a not for profit organization. This account is a base to prepare a final accounts of not for profit concern. And this account shows opening and closing balances of cash and bank or bank overdraft. And we'll see what is it. These are the features of receipts and payment account. Now, types of receipts: capital receipts and revenue receipts. Capital receipts and revenue receipts. So first, we'll see the what is the definition of capital receipts. All such receipts are non-recurring in nature and not forming a part of regular flow of income of a concern are known as a capital receipts. Example: specific donations for a building, sports tournaments, library, life membership fees, sales proceeds of fixed assets. Capital receipts are either added to capital fund or separately shown on a liability side of a balance sheet. And what is revenue receipts? All such receipts which are recurring in a nature and represent regular flow of income of a concern are known as a revenue receipts. Subscription rent, locker rent, interest received, etc. So receipts are revenue and capital. Two types are there: revenue receipts and capital receipts. So revenue receipts are coming in a income and expenditure account, and receipts of capital will come under a balance sheet. All receipts are not income. All receipts are not income and capital receipts and consider in a different manner. We'll see the while solving the problem we can understand properly. So types of payments. In a payments, the what are the types are there? Capital expenditure, long period, and revenue expenditure, short period. Example for the capital expenditure: purchase of a land, furniture, machinery. This will go for the long period. And the short period of and revenue expenditure short period, that is salaries, tax, insurance, and premium. This is and coming under short period, a short period of revenue expenditure. And so, what is the first one is capital expenditure. These expenditures are non-recurring expenditure in nature. The benefits of such expenditures are likely to be received for a long period. These expenses are shown on the asset side, the balance sheet, and their balances are carried forward to next accounting period. So these are the purchase of a land and furniture and machinery. These are the assets for the not no, asset for the receipts and payments. So these entries will come under the asset side of the balance sheet. And revenue expenditure, their expenses are recurring in nature. The benefit of these expenses are enjoyed immediately in current year. These capital expenditures are showing in a balance sheet and carried forward to next year accounting period. Next year it will calculate for the this year entries will calculate it in the next year for the showing in a balance carry forward. And revenue expenditures are showing in a current year only. So next, deferred revenue expenditure. Deferred revenue expenditure is actually a revenue expenditure. Such expenditure is incurred for receiving benefits for more than a year. Example, advertisement expenditure is paid rupees 30,000 is for 3 years. In such case, so this is a advertisement expenditure is paid rupees 30,000. We are calculating it for 3 years. In such case, 1 by third of a 30,000 is 1 by third of 30,000 is 10,000 is for a current year. So while calculating receipts and payments, we need to consider current year, previous year, current year, and next year. So 10,000 we are considering for the current year, and it should be debited to income and expenditure account. So income and expenditure account it will come under. And 2 by third portion, 20,000 expenditure should be shown on a asset side of a balance sheet. So total receipts and total payments. Revenue, so credit side of income and expenditure account it will show income and revenues are showing in a credit side of income and expenditure account, and capitals liability side of balance sheet. So in a final accounts also we used to calculate capital was coming under the liability side of balance sheet. And in the total payments also revenue, debit side of income and expenditure account. debit side of the income and expenditure account, and capital balance sheet asset side.